Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SOFI stock to determine if this is still a good buying opportunity ahead of their earnings report and after we have their earnings results. For more stock news updates on SoFi Technologies, remember to go and smash that like button right now, comment your thoughts down below about what you thought of the earnings report, subscribe if you are new, and without further ado, let's jump right into today's stories. SoFi Technologies currently trades at $5.50 per share, while experts believe the company should be worth anywhere between $6 at the low end and $11 on the high end, so arguably this company is undervalued. If you're not familiar with this company, SoFi Technologies is a fintech company or a neo-banking company that offers their consumers an all-in-one inclusive digital app which gives them access to various financial products and financial services. SoFi Technologies is about to release their third quarter earnings results on November 1st, and if you're watching this after the earnings results, stay tuned to determine if I am right in the predictions that I am giving you. If I am right, remember to go and smash the like button. If I'm not right, comment down below. Everybody and their uncle believes that SoFi Technologies will miss their upcoming revenue estimates and earnings estimates. However, I don't think so. I think this is actually a good time to buy SoFi Technologies for a long-term position, but remember, do not over-allocate yourself to singular risky growth companies such as SoFi. I myself only have around a 4% allocation to this company because my portfolio consists of a plethora of other companies that are giving me fantastic returns. If you're curious about what companies and ETFs that I personally invest into, every so often on Thursday and Friday, I provide a portfolio update that I am growing to $100,000 in less than 2 years, and SoFi Technologies is one of the risky growth stocks that I am investing into because I think it does have long-term potential. Now, like I said, don't bet the farm on SoFi Technologies, but I do think it should at minimum be on a watch list for you and at maximum have around a 5% allocation. I'd also want to point out and make investors aware that if you remember when I reported on the second quarter earnings report of 2022, the CEO actually started to brag on how amazing SoFi Technologies is. However, this is not particularly surprising for a CEO to do something like that, but I do want to highlight some of the things he brought to our attention. For instance, the company's financial services segment grew their net revenues by 78% year over year. On top of that, their technology platform net revenue increased by 85%, while also adding 450,000 members to the overall company, which would equate to a total of 4.3 million members in total as of the end of quarter 2 of 2022, which would represent a 69% year over year increase and growth rate. And this is crazy growth from this very innovative company. On top of that, the company has a fantastic bank charter and 2 other acquisitions, such as their Technisys platform, as well as their Galileo platforms, which will not only lower their overall expenses and costs, but also increase their overall revenues. But despite all of this fantastic news, investors seem to be somewhat melancholy in regards to this stock, to where they believe the SoFi stock price will fall after the earnings report due to negative macroeconomic conditions, such as very high inflation, increasing interest rates, and very unfriendly fiscal policies from the central banking institutions, such as the Federal Reserve. And this makes traders and investors uneasy about the future of various financial businesses, considering the current environment we are in. This fear is very well put in the sense of, yes, this is going to be short-term pain, but it doesn't affect me much because I am a long-term investor who identifies companies before they absolutely explode. Wall Street particularly is pretty positive on SoFi Technologies overall, and for their upcoming earnings report, analysts currently project that they will bring in revenue of $391.84 million. On top of that, for their quarter 3 results, they're also betting on a net earnings loss or EPS loss of 10 cents per share. Now, I personally believe that SoFi Technologies will beat in one of these categories, either their revenues or their earnings per share, and for me personally, I believe that they are going to have a revenues beat on their upcoming earnings report, which could make the SoFi stock price surge temporarily by a couple percentage points. To add more fuel to the flame, if SoFi beats both on their EPS as well as their revenues, this could act as a phenomenal catalyst to cause the SoFi stock price to surge upward, but I do believe that this upward momentum will be temporary in the sense of we are still in a negative macroeconomic environment, and until the overall economy starts to recover holistically, we are not going to see many growth stocks maintain their values, even if they surge at various times according to their financials. Now, with this being said, I want to point out that there is no guarantee that SoFi Technologies will beat in either their EPS or their revenues, but I believe that they will beat on their revenues, and they could possibly beat on their EPS as well. I think they're growing their revenues at an astounding rate, and this eventually will lead to profitability, and I will actually show you the graph that supports this analysis later in this very video. The best move right now, in my personal opinion, is just to keep money on the sideline and not invest too much unless you're a stock trader. This company is a risky single growth stock that should only require a small amount of investing into this company. There's no need to invest heavily into this particular company because that would be improper risk management, particularly regarding the negative macroeconomic environment that we are experiencing right now. That just would not be proper risk management, and it could cost you a lot of money over the long term if you do not learn this lesson right now. Now, moving on to a more bearish perspective of SoFi Technologies is that this is a phenomenal growth company, but I want to make a lot of investors aware of their debt load, and a lot of people just aren't aware of this. For instance, if we look at SoFi Technologies' balance sheet, they have a total debt of around $3.78 billion, which is a lot of money. 54.44 million of this is longer-term debt, while 3.72 billion is current debt. So what do we do with these statistics? Well, if we adjust for the $707.3 million that they have on their balance sheet in terms of cash or short-term cash equivalents, and we deduct that from their overall debt, because this is liquidity that they can use to offset their debt load, that would still equate to around a $3.07 billion debt load for this company. Now, some investors do think that this is rather high, but I don't. Normally, for growing technology companies, they tend to take on a lot of debt in the beginning to invest into themselves, to later pay off this debt once the company becomes profitable. And we will talk about the company's profitability aspects and prospects later in this video, but as of right now, the company could be profitable as soon as 2024, according to current metrics. So overall, I don't think this is a huge Debbie Downer for this company, but I do want to make investors aware that they do have billions of dollars worth of debt, and their short-term cash equivalents and liquidity on their balance sheet is not enough to cover it. But with that being said, I want to show investors the radical increase that this company has experienced in terms of their revenue. For instance, last year, SoFi grew their revenue by 53%, which is astonishing. Like I've said multiple times in past videos, if you can identify a company that is trading to a low PS ratio or book value or whatever accounting ratio that you would like to use, and they're compounding and growing their revenue at over a 30% CAGR, which stands for compounding annual growth rate, over the next few years, this is a crazy growth company. And SoFi Technologies clearly is beating that particular metric, especially last year where they brought in 53% revenue growth. This year, I expect them to bring in around a 42% CAGR for this year and potentially next year. But regardless, it still stands that this company is growing at over a 30% CAGR until the company becomes profitable. Like I said, this company is going to become profitable during the year of 2024, according to current forecasts and projections among experts. Many experts believe this is going to happen at the end of the year, but for me personally, I think it's going to happen more around the middle of the year of 2024. If you're looking at the chart on screen, the revenue for this company and their future prospects is labeled in blue, their earnings and their EPS is labeled in green, their free cash flow, which is overlapping their cash flow flow from operations is in blue and yellow respectively. Just from this graph, we can see that the stock price should start to surge and really start to appreciate at the end or the middle of 2024. This is why long-term investors such as myself view this particular time frame as the best investing opportunity, because the stock price may not be as low as it is right now in the future or past that particular point at the end of 2024. So the whole point of long-term investing is to identify very rapidly growing companies and invest into them while they are cheap, and then once the company starts to build itself up and their stock price starts to appreciate, we are already invested and we don't need to buy this company at a higher price. But like I said earlier, we do not want to over allocate ourselves to this company because we want to practice proper risk management. We don't want to take on unnecessary risk of losses, and that's another reason why my portfolio performs better than the majority of other investors, particularly on this platform. I am a hybrid dividend growth investor that is very risk averse, that builds wealth over the long term. I am even proving this by building a portfolio within 2 years to $100,000 despite the negative macroeconomic environment. So if I can do it, you can do it too, especially if you just listen to my strategy and what I am saying that I am doing. Now, this is not necessarily advice for you because this is not investing advice. These are just my thoughts and what I am doing for my particular portfolio, and I intend to hold SoFi Technologies well past the end of 2024 without adding much more and without also selling because my average cost basis is so low. The whole point of long-term investing, like I mentioned, is to identify this company early and then hold it for the long term. Now, clearly the stock price is going to be extremely volatile, going up and down over the next 2 years, but after the end of 2024, the stock price should stabilize. But if you are the type of investor who is over allocating yourself to SoFi Technologies over a 10 to 15% allocation, that is improper risk management. There are so many other fantastic companies that you could be holding in your portfolio that are not only safer, but they have also proven themselves. Lastly, I'd like to go over and highlight some very key components of SoFi Technologies that makes this company fantastic in terms of their future growth. First, their earnings versus savings rate is very positive. Their earnings versus the overall market is extremely impressive. They have high growth in their revenues as well as earnings, and they have a future growth CAGR of over 30%. Now, the future return on equity is somewhat questionable, but overall, the future of this company does look bright. So hopefully, if you want more on this company, you would go and smash that like button right now. I want to hear your comments right before this earnings report, because remember, even if the stock price surges due to an earnings beat or a revenue beat, or potentially both, I do anticipate that it will fall back down considering the current environment that we are in. Now, if that doesn't happen and SoFi Technologies misses on their revenues as well as their EPS, clearly the stock price is going to drop, but that just gives me a better buying opportunity because I anticipate and I want this company to make up around a 5% portfolio allocation for me, and right now I'm only at a 4%, so I'm going to use that extra and that last 1% to average down my average cost basis, which is already pretty good. But I would love to hear your thoughts down below. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.